Welcome to XRP On Moon, your source for the latest and most important updates in the world of XRP and crypto. Today we are covering breaking news that could have major implications for XRP holders and the broader cryptocurrency market. Reports indicate that the Trump administration is exploring a new framework for digital assets, with XRP potentially positioned as a key component in upcoming policy developments. This is not ordinary market speculation. Institutional and regulatory signals suggest that XRP could be formally recognized as a payment-focused digital asset, creating a pathway for adoption by banks, financial institutions, and even government reserves. The proposed framework, sometimes referred to in media as the Crypto Clarity Act, aims to define clear classifications for digital assets, separating security tokens, commodities, and payment tokens. XRP, with its established cross-border payment utility, fits naturally into the payment token category. This clarity could remove significant regulatory uncertainty that has historically slowed institutional participation in the cryptocurrency space. By establishing XRP's role in legal and financial frameworks, large-scale investment and integration by banks could accelerate, providing a potential long-term catalyst for demand. Recent reports also indicate that the Trump administration is considering a digital asset reserve for the United States, with XRP included alongside Bitcoin and Ethereum. While details remain limited, the inclusion of XRP in a government-backed reserve would signal substantial institutional confidence and legitimacy. Such recognition could act as a market driver, influencing adoption by global financial institutions and signaling a shift in how governments view utility-based cryptocurrencies. Ripple Labs, the company behind XRP, continues to advance partnerships and banking integrations worldwide. These developments indicate that Ripple is actively positioning XRP for global financial system adoption. While short-term price volatility may persist due to macroeconomic conditions and geopolitical uncertainty, the structural narrative for XRP is strengthening. This narrative focuses on long-term adoption potential, regulatory clarity, and integration into both private and public financial infrastructures. Market participants should note that this type of regulatory and institutional alignment has historically been a precursor to major adoption waves for utility-driven digital assets. XRP's unique positioning as a cross-border payment solution makes it particularly well-suited to benefit from clarity and formal recognition at both institutional and governmental levels. Analysts monitoring the situation highlight that this Ripple New Deal could serve as a catalyst for renewed interest and investment in XRP once official confirmations are made. The signals surrounding XRP's potential integration into regulatory frameworks and government reserves suggest a strategic shift in the market's perception of the token. While short-term volatility is expected, the long-term narrative positions XRP as a leading candidate for adoption in large-scale financial systems. The following parts will break down the mechanisms, potential market impact, and specific indicators that could confirm whether this development evolves into one of the most significant catalysts in XRP's history. Following the initial signals from the Trump administration, the implications for XRP extend beyond regulatory recognition into institutional adoption. The proposed frameworks and government-level discussions suggest that XRP may become a preferred digital asset for cross-border settlements. Ripple's technology is already designed to process high-volume international transactions with speed and low cost, positioning XRP as a solution to inefficiencies in the traditional banking system. As governments and large financial institutions evaluate alternatives to SWIFT and traditional settlement networks, XRP's use case aligns with their operational requirements, making it a candidate for strategic integration. Institutional investors have historically been cautious with cryptocurrencies due to legal ambiguity and volatility. The current developments, however, reduce these barriers by establishing a clearer legal classification for digital assets. XRP's potential designation as a payment token could attract investment from banks, hedge funds, and asset managers seeking exposure to digital assets with utility beyond speculation. The narrative emerging from this situation is that XRP is moving from a purely speculative token to a regulated, utility-driven asset. Market analysts note that this shift often precedes significant inflows of institutional capital, which can create sustained upward pressure on demand. Another key factor is global banking partnerships. Ripple has secured numerous agreements with international banks and payment providers that leverage XRP for liquidity and settlement. These partnerships are not just technical integrations, they represent proof of concept for XRP's utility in real-world financial systems. When combined with potential regulatory clarity, these integrations could accelerate adoption, signaling to the market that XRP is not just another cryptocurrency, but a functional component of global finance. This dual approach, technical adoption plus regulatory recognition, creates a unique market position that few other cryptocurrencies currently hold. The geopolitical context also plays a role. As international trade and cross-border payments continue to grow, countries are looking for efficient, scalable solutions. XRP's underlying infrastructure enables instant settlement with minimal fees, which is especially attractive in regions where traditional banking networks are slow or costly. The involvement of a high-profile political figure and discussions at the governmental level amplify confidence in XRP as a strategic asset. This could also influence other countries to consider similar adoption frameworks, further increasing XRP's relevance on a global scale. Price volatility, while expected in the short term, may be less indicative of long-term potential. Institutional adoption tends to smooth out price swings as liquidity increases and market confidence grows. Analysts monitoring the sector suggest that the narrative surrounding regulatory clarity, government interest, and global banking partnerships will be the primary driver of XRP's medium to long-term trajectory, rather than short-term speculative trading. For holders and potential investors, understanding this distinction is critical when evaluating XRP's value proposition. It is also important to note the potential network effects. As XRP becomes more widely used for institutional transactions, demand for the token itself may increase. Unlike many cryptocurrencies that primarily serve as stores of value or speculative instruments, XRP has a functional purpose within financial infrastructure. Each integration, whether with a bank or government digital asset reserve, reinforces this utility and strengthens the case for adoption at scale. Analysts point out that this feedback loop, regulatory clarity driving adoption, adoption driving network growth reinforcing legitimacy, can significantly influence market dynamics over time. Additionally, Ripple's ongoing litigation with regulatory authorities has been a major concern for investors. The current developments suggest that a resolution or forward-looking framework may soon provide the clarity needed to unlock XRP's full potential. Legal certainty combined with active institutional interest often precedes accelerated adoption, making XRP a token that could outperform others that lack regulatory or functional alignment. Continuing the analysis of XRP in light of recent developments, it is critical to examine the specific market signals and adoption metrics that could indicate the progression of the Ripple New Deal and potential institutional uptake. XRP's market behavior over the past several months has reflected broader crypto market trends, including macroeconomic volatility, regulatory uncertainty, and shifts in investor sentiment. However, beyond price fluctuations, the underlying adoption metrics suggest structural growth, which is often overlooked in short-term trading analysis. One key metric is transaction volume on the XRP ledger. Despite periods of price consolidation, on-ledger transaction volume has remained relatively stable and in some regions has increased. This indicates continued real-world usage rather than speculative trading. Sustained transaction activity demonstrates the utility of XRP as a payment token, reinforcing the narrative that it is not just a speculative instrument but a functional part of financial infrastructure. Increased transaction volumes, particularly in cross-border payments, reflect both institutional and corporate adoption. Financial institutions often conduct large-scale testing of blockchain networks before full integration, meaning that current metrics could be early indicators of broader adoption. Another important signal is institutional inflows and partnership announcements. Ripple has consistently reported new agreements with banks and payment providers, expanding its global footprint. While these partnerships do not always translate immediately into token price movement, they establish credibility and signal long-term integration. Analysts emphasize that institutional partnerships serve as a leading indicator for future demand. The more financial institutions integrate XRP into their operational workflows, the higher the probability that token demand will increase, particularly for liquidity and settlement purposes. Wallet activity and large holder behavior also provide insight into market positioning. On-chain analytics indicate that significant XRP holders have been increasing their positions in anticipation of regulatory clarity and institutional adoption. When combined with the potential involvement of XRP in government-backed initiatives, this accumulation pattern reflects growing confidence in XRP's long-term viability. Unlike short-term speculative buying, these movements suggest that investors are positioning themselves based on fundamental adoption metrics and strategic narratives rather than price momentum alone. Global regulatory trends are another factor shaping XRP's adoption potential. With the proposed framework under discussion by the Trump administration, there is a possibility of broader regulatory clarity for digital assets in the United States. This clarity can act as a catalyst for institutional involvement by reducing legal risk. In addition, other countries are observing regulatory models in major economies, and similar frameworks could emerge internationally, further supporting XRP's adoption. A globally recognized payment token with clear legal status has the potential to attract both banks and corporations seeking efficient, low-cost solutions for cross-border transactions. Market analysts also monitor liquidity and trading volume across major exchanges. Even during periods of price stagnation, XRP maintains substantial liquidity, which is an important prerequisite for institutional integration. High liquidity ensures that large-scale transactions can be executed efficiently without significant market disruption, a critical requirement for banks and payment providers. This readiness supports the narrative that XRP is not only technically capable, but also operationally prepared for widespread adoption. The macroeconomic context also plays a role in evaluating XRP's potential. Global trade volumes, cross-border payment demand, and the need for faster settlement solutions create an environment conducive to utility-driven assets like XRP. While traditional fiat rails remain dominant, the inefficiencies in speed, cost, and accessibility highlight the advantage of blockchain-based alternatives. XRP's ledger, combined with Ripple's existing infrastructure, positions it as a leading solution in this context, which aligns with institutional and governmental interest in integrating blockchain solutions. Sentiment analysis within the crypto community indicates growing optimism around XRP's structural narrative. Conversations among industry insiders, institutional analysts, and regulatory observers highlight XRP's functional role in real-world financial processes. This sentiment, when aligned with adoption metrics and regulatory developments, reinforces the credibility of XRP as a long-term utility token. The combination of transaction volumes, institutional partnerships, accumulation patterns by large holders, regulatory trends, liquidity readiness, and macroeconomic conditions creates a comprehensive picture of XRP's adoption trajectory. These metrics suggest that XRP is not only well-positioned to benefit from upcoming regulatory clarity, but may also become an integral component of global financial operations. The next part will analyze potential market outcomes, liquidity dynamics, and short to medium-term scenarios for XRP based on these indicators. Building on the adoption metrics and regulatory signals discussed previously, it is essential to examine potential market outcomes and the strategic implications for XRP holders and institutional investors. XRP's trajectory in the coming months and years will likely be influenced by a combination of regulatory clarity, adoption by financial institutions, global liquidity dynamics, and macroeconomic factors. Understanding these elements can help stakeholders evaluate risk and identify opportunities within the evolving landscape. One key factor influencing potential outcomes is the degree of institutional adoption. As financial institutions increasingly integrate XRP for cross-border settlements, demand for the token could experience sustained growth. Unlike speculative-driven cryptocurrencies, XRP's price behavior is more likely to correlate with functional utility and transactional volume. This suggests that while short-term volatility may persist due to market sentiment or macroeconomic events, the medium to long-term trend could favor gradual appreciation in value driven by adoption rather than hype. Institutions entering the market also contribute to liquidity stabilization, reducing the likelihood of extreme price swings and creating a more predictable market environment. Liquidity dynamics themselves are a critical consideration. XRP maintains high liquidity across global exchanges, which is a prerequisite for institutional participation. High liquidity allows large transactions to occur without materially impacting market prices. This operational readiness positions XRP favorably relative to other digital assets that may face liquidity constraints. Furthermore, Ripple's existing partnerships with banks and payment providers create a bridge between traditional finance and the XRP ecosystem, enhancing the token's usability in real-world applications. These factors combined may establish XRP as a foundational asset for financial institutions seeking efficiency in settlement networks. Regulatory clarity remains a central determinant of market outcomes. The ongoing discussions within the Trump administration and potential frameworks like the Crypto Clarity Act could provide a blueprint for legal recognition of XRP as a payment token. Regulatory certainty can unlock significant institutional investment as risk management concerns are a primary barrier for large-scale participation. Additionally, clarity at the U.S. federal level often influences other jurisdictions, creating a ripple effect that may encourage international adoption. This regulatory alignment is crucial because it not only legitimizes XRP, but also facilitates scalable use cases for global finance. Macro trends in global trade and cross-border payments further influence XRP's potential trajectory. Increasing demand for faster, low-cost international transactions highlights the advantage of blockchain-based solutions. Traditional settlement systems often require days to process international payments and involve multiple intermediaries, adding cost and complexity. XRP, leveraging Ripple's liquidity and on-demand settlement infrastructure, offers a significant efficiency advantage. As adoption scales, the network effect could reinforce XRP's status as a preferred digital asset for cross-border transactions, influencing both market sentiment and functional demand. From a strategic perspective, holders and potential investors should consider both risk and timing. Short-term price fluctuations are inevitable in any emerging asset class, and XRP is no exception. However, positioning based on structural adoption metrics rather than purely speculative factors provides a more informed approach. Stakeholders may view current volatility as an opportunity to accumulate, particularly if adoption metrics, transaction volume, and regulatory signals continue to strengthen. Understanding the broader structural narrative is key to evaluating potential upside relative to short-term market noise. Market sentiment and community engagement play a reinforcing role. XRP's active ecosystem, including developers, institutions, and individual holders, contributes to both network utility and public perception. As awareness of regulatory progress and adoption milestones grows, confidence in XRP's long-term viability could increase. Sentiment alone cannot sustain price, but when combined with adoption, liquidity, and regulatory clarity, it can accelerate recognition of XRP's strategic importance within both institutional and retail markets. As we conclude this comprehensive analysis of XRP in light of the recent Trump administration developments and Ripple's ongoing strategic initiatives, it is important to assess forward-looking scenarios and their potential implications for the market and investors. XRP's trajectory will be shaped by a combination of regulatory clarity, institutional adoption, macroeconomic trends, and its technical utility as a payment-focused digital asset. Understanding these factors allows stakeholders to form a more informed perspective on potential outcomes and strategic opportunities. One forward-looking scenario involves accelerated institutional adoption. If regulatory frameworks, such as the proposed Crypto Clarity Act, officially classify XRP as a payment token, large-scale integration by banks and financial institutions could follow. Such adoption would not be limited to pilot programs or proof-of-concept trials, but could extend to operational use in cross-border settlements and liquidity provision. This scenario would likely result in consistent demand for XRP to facilitate these transactions, potentially contributing to long-term upward pressure on the token's market value. The combination of adoption-driven demand and regulatory legitimacy would create a foundation for sustainable growth rather than short-term speculative volatility. A second scenario considers broader market dynamics and network effects. As XRP continues to be integrated into global payment systems, the utility of the token strengthens. Each new financial institution, payment provider, or government reserve that leverages XRP adds credibility to its functional value. Over time, this network effect may reinforce both market confidence and transactional volume. High adoption rates coupled with liquidity readiness could position XRP as a standard digital asset for international settlements, differentiating it from cryptocurrencies that lack practical use cases or real-world integrations. Conversely, it is essential to acknowledge potential risk scenarios. Short-term price volatility is an inherent feature of emerging assets like XRP. Macroeconomic pressures, geopolitical instability, or unexpected regulatory developments could temporarily affect investor sentiment and market behavior. Additionally, while regulatory clarity is anticipated, the timeline and exact framework details remain uncertain. Stakeholders must recognize that despite strong adoption metrics and infrastructure readiness, external factors may influence market performance. Understanding and managing these risks is a critical component of responsible investment strategy. From a strategic perspective, stakeholders should focus on fundamental adoption indicators, network utility, and regulatory milestones rather than purely speculative metrics. Monitoring transaction volumes, partnership announcements, large holder activity, and ongoing legal developments provides a data-driven approach to evaluating XRP's market positioning. Investors who align their decisions with structural adoption trends may benefit from early positioning while managing exposure to short-term volatility. The long-term outlook for XRP also intersects with broader global financial trends. As cross-border payment demand continues to grow, traditional banking systems face pressure to adopt faster, more cost-effective solutions. XRP's underlying technology and Ripple's operational framework position the token to capitalize on this structural demand. Additionally, potential government adoption or inclusion in digital asset reserves could further reinforce XRP's status as a credible, utility-driven digital asset with tangible use cases. XRP's potential over the medium to long term appears strongly linked to institutional and regulatory developments. While short-term fluctuations are likely, structural adoption, liquidity readiness, and global financial integration could establish XRP as a leading payment-focused digital asset. Investors and stakeholders should remain informed, monitor key indicators, and understand the broader narrative that differentiates XRP from other cryptocurrencies. The information provided in this series is for educational and informational purposes only and should not be considered financial or investment advice. Cryptocurrency investments, including XRP, carry significant risk due to volatility, regulatory uncertainty, and market dynamics. Individuals should conduct their own research, consider their risk tolerance, and consult with a licensed financial advisor before making any investment decisions. Past performance is not indicative of future results.